Hi, everybody. Welcome back. Another GameStop video for you here all today. Let me get to my day trades out of the way. If you're interested in what I do day to day, we do the long-term investment portfolio. I have my daily small cap trades, which I love. Um, those are all in their own video, aside from the GameStop here. Just kind of separating them. The GameStop videos get way more views, so why bore you with that if you're not interested? If you're not interested, but in case you are, they're available, right? So it's more of like a journaling process for myself, a daily review. You know, what worked, what didn't work, how can I improve, right? Um, GameStop trading down today. S&P 500 was down as well. You know, we talked about that yesterday. The broader market's going to retrace. It's going to be hard for us to get going. Losing that key level yesterday and today going down a little bit further. So again, I'm still maybe a little bit set on this AMD pattern here. And I was just thinking, you know, if we can break down into this manipulation leg before earnings, oh, that would actually be pretty cool. I was kind of thinking beforehand that we would, you know, spike to the top of the band again for earnings and then die post earnings. But the timing of these things is not really up to me. You know, we just set our levels and kind of watch it play out day by day. But currently, we're retracing back to that lower support level, which we see, you know, hold for some time here. So, you know, anywhere below this level is a perfect area to put this manipulation leg, right? All of these stop losses are going to be below this bottom trend line. And, you know, that would be so good for them to stop out, absorb all the liquidity, buy it up right before an amazing earnings, you know? So eyes on that. Aside from that, the daily price action here was not great, and I guess I can just get rid of this. Oh, it's locked. Just so we can see a little bit better, right? You know, we died off in the morning, and then basically regained it all in the afternoon. So this is GameStop, right? I mean, there's no volume here. Our current day volume was 4.38 million, down from yesterday's 5.5. Our average falling now down to about 7.24. It's dry out there, you know. The low volume meme, right? The big ears. I missed that. I missed that. Those were the days. Aside from the price action here today, which is like most days irrelevant. You see, we have this buy side liquidity rejecting multiple times. You know, I guess that could be important. The buy side, sell side liquidity, fancy words for supply and demand, right? Something that you could become more familiar with while we begin to look at my charts and how I've got them set up for you all. Order blocks as well, whether they're bullish or bearish, will have a positive or a negative and be different colors. So just so you're aware of what you're looking at here. But aside from that, yesterday we had all that Chicago volume, right? And then we were looking at, you know, a little bit of backtest data. And I said, okay, well, we've got 7 months missing data. Let's collect it all and see what we get from there. And we didn't get anything. There was only one day in the last 7 months, and I think I might have marked it. Yeah, I did. I put these eyeballs on it. So here's the first time, right, where we have that 14% right before Kitty returned, and then, you know, big bada boom. But then we had it again, you know. And this wasn't a lot. This was 10%. So this was 14% of the volume. This was 10% of the volume, and it preceded a massive decline or retracement, right? So you know, LOL. But then we have it again. So we'll see what happens here. The difference is, right, this is happening at bottom trend. This is happening way above trend. This is happening at bottom trend. Maybe it happens again at top trend. And not only does it become a buy signal, but it's also simultaneously a sell signal depending where you are based on the trend line. That's, what logic I can apply to this if we are going to make it make sense. Because it's not going to make sense that it goes up each way when this was clearly timed right at the top. But it is, I think, coincidental. It's curious that this was timed right at the bottom perfectly. This was timed right at the top perfectly. And now we have another at the bottom. That's interesting. So we're going to watch it, see how it unfolds there. So that's where we found, that Chicago volume. We're looking at that yesterday. The options chain today, we can look at that. Well, let's go to Max Payne first. The lower this number is, the more bullish it is, and the put-call ratio in general. So we see things looking pretty good, right? October 17 has got a lot of volume here. And then Jan 26, I guess. And then far out, man. Jan 2027. Some things, I don't really see much of a ramp here to get excited about or anything. We do see Max Payne 2250 kind of chilling, 23. Hopefully we can get above that and kind of blow this up, right, and throw a lot of this chain in the money, and then all these OTM contracts swing in the money, and that becomes our ramp, right? But we're going to need a catalyst, some form of event to get us up there, right? Cost to borrow, chilling. Cost to borrow goes up equals bullish, right? Lots of shares for them to get here. We want the shares to be dry for them as well, just so there's nothing for them to borrow, because then they can just borrow shares and short. But at the same time, the more shares there are to borrow, the less they're actively using to short, because they're maybe being cautious. They don't want to, short at this moment in time. And that's where we get, the utilization as well, right? So, what percentage of those available shares are they using, right? So, when things are really bearish, utilization's up high, right? But when things are kind of uncertain or looking bullish, utilization down low, right? So that's kind of how we map this, and we're just trading sideways again, about 65%. IV here is up a little bit again today, with the price down. Now that's interesting, and that is the exact mechanism that we look to capitalize off of with our earnings options plays. Couple weeks before earnings, we're buying in the money options, at the money options, a month or two out, and then the IV goes up into earnings, right, as more people pile in. And then you just sell these contracts the day of earnings, the afternoon of earnings. Don't hold through earnings, because then you may experience an IV crush. You don't want to be a part of that. But you can just sell the hype that afternoon. And even if the price doesn't go up, your contracts will appreciate because of the increase in IV most times. So it's a really nice way to play. And so that will, kind of track some contracts as well as we get closer to earnings here. So we got about 14 days. There was no announcement. We should any day get that earnings announcement here. It's kind of behind my cam, but earnings report in 14 days estimate on potentially the 3rd. And once I think that comes in, then we'll really see IV start to go up, right? And we'll get one of these earnings spikes here, or pre-earnings spikes, right? You can see how the IV drops on earnings, post-earnings spike here, and then kind of drops on earnings. So most times, we're going to drop on earnings, or drop right after earnings, I guess. So that's why you want to be selling those contracts just before earnings. So buy them a couple weeks before earnings. Right now is a good time, right when IV starts to tick up from being at the bottom, and get some time on them as well, right? And don't hold them too long. Sell them before earnings during the hype, right? It is what it is. People might not like that, but it's the truth. So, done with that. We talked about the put call ratio, just kind of, the options call chain, I guess. We can go back to the specific chain, and we're kind of looking at, I'm looking at October 17th, and then we like things that are in the money, or at the money, right? So we can kind of just look at open interest here to look for the popular strikes. 21, 23.50, and then 26 is loaded. We got, a few contracts here at 26. That's no doubt. 29 has a ton as well, 30,000 contracts. So, if we can get a ramp, like if we can get an event, we've got a ramp, right? Here's another chunk at 35, 31,000 contracts. So, we're seeing them. It's increasing day by day, slowly. People are piling in for that earnings run that I kind of just explained the mechanism of. September 9th. Well, let's go through them all. We don't really see much here. This chain is dead, right? There's no liquidity. We'll go to the 19th. This looks a little bit better. Kind of starting around 26, 27. All the way up to 29. Not really as loaded as October, right? And that's, you want the time, right? So you don't become a victim of theta decay. And then we'll get a little closer, I guess, see if there's anything. We got some 2650s here, which had some volume today as well. And not too much, right? And high is 33. That's crazy. That's short term too. You're gonna be rich, dude, or lose all of your money. So 23s today, some 24s today. And the closer we get to the earnings event, the closer your strike can become, right? So typically I like to have about double the time as to the event. So say I want to sell my contracts in 30 days, right? I want to buy 60 days worth of time typically. Just, for me, that's kind of my rule of thumb, right? This is pre-earning, so I don't really see there being much here except for this crazy person at 25, which had some volume today. A lot of volume here today, actually, right at the money, just out of the money. And there was a ton here. There's and a lot of volume on these today too. Whoa. So a lot of short-term, near-dated, at the money strikes being played with today, which again, typically we don't see a lot of that. Usually it's a little bit dry boned, but 'tis earnings season, so just kind of keeping an eye on the chain, seeing how it builds out in the coming weeks, right? So talked about that, talked about our borrow rate. We talked about the Chicago volume. It was about 3.2% today. Not much. Definitely not 30%, right? So still kind of looking out for the next 10, 20 days on that. And talked about our price action as well. SPY retracing today, which, it's not going to help us. But once SPY turns around, we're not really bleeding down like these other companies. We're pretty much bottomed out, which I guess is a good thing. But once we do turn, it should be fairly rewarding. So again, we'll take it day by day. Thank you all so much for watching. If there's anything extra I can cover for you, let me know in the comments below. It's been my pleasure, and I will see you soon in the next